Let's take a look at what's gone on with house prices over the last month and look at the two major indexes and what they're reporting about the property market in the UK. So the two major indexes are the Halifax Housing Report and the Nationwide Housing Report. And both of them agree that the UK is going through a little mini property boom right now. This is the post-COVID lockdown bounce. Nationwide reporting growth year on year of 5.8%. Halifax reporting growth year on year of 7.2%. Now, both of these reports use slightly different data samples, so the truth is always probably somewhere in between those two figures. What we're seeing at the moment is definitely a situation where, because much of the UK was in a state of limbo from March through to May or June of 2020, a lot of people who were sitting on capital have come out very, very quickly post-lockdown with plans to purchase property. And a lot of this is being driven by the owner-occupier market as opposed to the investor market at this stage. Big buying choices driven by people looking for more space, the opportunity to work from home with home office facilities, also more outside space as well, because I think people are expecting that some sort of restrictions in relation to the control of the coronavirus are likely to be in place for some time to come. However, we also have to remember that 2020 was shaping up as a fairly strong year for property transactions in any case. If we go back to January and February of this year, buyer and seller registrations were both up, with more buyers being registered than properties available for sale. There was quite a lot of buoyancy and desire in the marketplace, and while London and the southeast may have been coming off in terms of activity over the last 18 months, that's in the context of those areas having gone through a growth cycle whereas much of the rest of the country had stood still. So this was shaping up to be a fairly strong year anyway, and most experts were predicting a year of growth around the 4 to 5% mark. Well, at the moment we're tracking a little bit higher than that year on year. Whether it stays at that level or not, once those people who were sitting on funds during the first COVID lockdown have kind of exhausted their funds and relaxed a little bit in the marketplace remains to be seen. This, of course, will have been helped by the stamp duty holiday as well that runs through to March 2021. There have been a number of calls within the industry for that stamp duty holiday to be continued, and that's to do with conveyancing taking a little while longer in this kind of coronavirus world where people are still not operating quite back at full capacity. A lot of things happening digitally. And there's one quote that in the owner-occupier market, conveyancing times have gone from 3 months out to about 4 or 5 months. So there's a concern that some people who made buying decisions because of the stamp duty holiday may be caught out not getting the transactions completed in time, but it remains to be seen what happens with that. Looking at the real data underlying these numbers, some of the key things to look out for here. Transaction volumes are up 15% since July. They are slightly down on where they were this time last year, but they're very, very close to where they were this time last year. Mortgage approvals are at their highest level since October 2013. That's a really strong position for mortgage approvals to be in. Looking at the survey of estate agents in the marketplace, there's also a fairly strong picture about where the market is sitting right now. So that doesn't mean that necessarily property prices are going to skyrocket and continue growing at this pace over the next 12 months, because we've got to remember there will be a fairly serious impact to the economy UK-wide because of what's happened with lockdowns to do with coronavirus. But certainly in the housing market, a lot of the factors are there to say that this is not just some bubble which is going to burst immediately. New instructions down about 8% this month versus last month, but still in very positive territory. There's still more new instructions coming on than what's available in the marketplace. The balance of stock is still going up. New buyers down by 12%, although they still very much outstrip the number of new instructions. So there's a great number of new buyers registering, even though the pace of new buyer registration has slowed down slightly. Agreed sales up by 3%, which should flow through into more transaction volume in the coming months. So overall, it's a fairly strong picture for the housing market in the UK. If you are sitting on something that you are considering flipping or selling, now would be a good time for that property to be on the market. If you are looking at that as a strategy, it looks like the next 3 to 6 months definitely will be fairly strong in terms of where the market's sitting. This should also flow through into reasonably good valuation numbers. The only sticking point right now is about 46% of people are reporting that surveyors have downvalued mortgage refinance proposals or mortgage purchase proposals over the last 2 or 3 months. Now, there's been quite a lot of talk about this in the industry because given where the housing market is right now, that doesn't seem a true reflection of where the housing market is sitting. Now, a lot of surveyors citing concern about the ongoing effects of the coronavirus crisis in the UK. However, hopefully that corrects itself over the next month because the evidence is certainly in the marketplace that there hasn't been the drop in house prices that some people were fearing as a result of COVID-19. So overall, the UK housing market in fairly rude health at the moment. House prices continue to go up. At the moment, that's very much driven by owner-occupiers as opposed to the investors market. There's still opportunities to get into the market as a property investor. Make sure you're buying at best price. Make sure you're factoring all of your costs and your profit margin when you're making your offers. Don't let the fact that the owner-occupier market, the retail market, is so strong right now, let an estate agent talk you into something that is not as good a deal as it should be for your property portfolio.